Well, we're just hours away from the Federal Reserve coming out and telling us what they're going to do. I'm going to tell you with certainty, 100% certainty what they're going to do. But we're going to focus in on today is, after the Fed comes in and tells us what they're going to do, I'm going to tell you, okay, what do we look at next? We're going to look at oil because the Iranian situation, that's going to push up inflation. I'm going to show you inflation numbers we're going to get tomorrow that's probably going to go blow the doors off the 2% the Fed's looking for. And then we're going to look at the other elements to figure out what's going to go on with these things over through here and why. Because if you're watching this video, hopefully you're a homeowner, home buyer, you're trying to figure out what's going on with mortgage rates, you came to the right channel, folks. My name is Dan Frio. I'm a licensed mortgage loan officer in all 50 states, as well as Puerto Rico. My slogans here is one application, one credit pool. We're going to compare your loan to over almost 40 different lenders. How? Why? I'm going to put a video right up through there so you can see why and behind the curtains on exactly how we do it. But what we like to do each day on my channel is we want to figure out what's going on with mortgage rates. So we start with the chart. So the first thing we're going to do is go right over through here. This is a mortgage bond. This is bad news. Okay, what you have to understand is just this. I'll make it simple. That number up through there, if it's red, that's bad. If it's 10 or more, you're going to really start seeing mortgage rates move. But this is kind of probably going to correct here in a second because I'm not expecting a big move today, especially with the Federal Reserve coming out. But let me show you some concerns I have right now. If you go back to a 5-day chart, I want to explain to you guys a couple things that have been happening this week. Okay, so you see up through there, right over through there. One day we dropped all the way down through right through here. This is called a gap. That's not good news unless it fills. Well, it filled and then it plummeted from there. Then yesterday we started with a huge gap down here. Well, what you have to remember is when this goes down, mortgage rates go up. So these gaps, unless they fill, they're not good news because they're going to push rates up even further. Well, I'm expecting this to correct. So at the end of this video, we'll come back and see where this comes in. I'm expecting this to come back almost to neutral, but let's see how it goes. The information for today, right through here. We have Wednesday. We have building permits came in right at point. That's just breaking news right through now. Durable goods orders, that came in a little bit better than expected. What I want to focus in on, the Federal Reserve is going to come out and they're going to do what today? Well, there's 100% chance. Yeah, there's 100% chance. If we go over through here, we're going to go to the Fed Watch tool. In 5 hours, the Federal Reserve, they're not going to do anything. 100% chance, not going to do anything. But let's go over and look at the data that they're going to look at to see what are they going to do down the road. Okay, so based on these predictions, if you go over through here, the probability, there's no rate cuts until December of next year. But we have two big things coming up. We have some inflationary numbers coming in, and you're going to see those really high. And then we're going to have a new Fed official. Okay, so his name is going to be Warsh. He's going to come in and he's going to start smoothing out the markets, taking away a little bit of the uncertainty right now. But the Iranian conflict, that's the biggest news. So the next thing we're going to do is go over to the news, see what oil's doing, because that's going to really predict where their markets are going to go. But really, there's no rate cuts in the realm till next year. You're going to probably see this change within the next probably 60, 90 days where these odds get a little bit better. I'll explain why here in a second, but those out there that need some help with some tools, I had a buddy call me yesterday and said, Dan, do you have any tools that can help me and my kids try to figure out if they're looking to buy a house, what kind of payments would they be looking at? Folks, go to my store. Right there here, you can click down below. And we're going to have tools here. These are all free. They might say purchase or whatever. Just put in your email address, put it in, and you're going to get these free calculators. And there's a whole bunch of them here. If for some reason you get a glitch or something, let me know. Just shoot me an email and I'll send you a revised version for some reason why yours didn't work. But let's get over to see where oil's going for today. And it's up. It's up. So what are you thinking is going to happen? Well, if I'm sitting here and I'm saying oil's up and I'm a trader, I'm thinking, okay, this is bad news. But we have earnings seasons coming in. But just based on oil, I'm saying, okay, the markets are not going to do very well today. But the thing we got going on this week is we have some of the biggest weeks this week and next week on earnings season of the top companies in the United States. So if you go to the earnings hub, and that's what this thing is called, the earnings reports, they're killing it. Okay, they're even exceeding what they expected. They're saying, okay, tariffs are going to really take a bite out of our profit margins. And then this oil with energy, it's going to take a bite out of it as well. But the earnings so far are coming in really good. If you see behind my head, you got green. And out of, I think, 18 earnings reports yesterday, we had 3 that didn't make it, and the other 15 made it or exceeded. So if we go back to this and we look at the stock market after oil, we're going to say, okay, earnings are fantastic. Oil's up. Well, if I'm a trader right now, I'm doing nothing. I don't know what the Federal Reserve is going to do. And the biggest thing with the Federal Reserve is after they come out and tell us what they're going to do, Federal Chairman Powell, he's the grand poobah of all this, he'll come out in front of the media about 1:30, and he's going to start answering questions. What happens then? Well, that's when all the media starts asking those questions that you and I want to know about. And that's when the market really starts to move. So today at 1:45 Eastern time, or I'm sorry, Central time, I'm going to come in, and this is right when Federal Chairman Powell's talking to the media, and I'm going to show you the market reactions. Because usually the market reactions right when they come out with their comments really doesn't move all that much. But then after, as he's answering questions and as we get a little more feedback on what they're thinking, then that's when their markets really move. So let's get to the last piece of this puzzle. If you're watching this, like I said, you're a homeowner that's trying to track rates to say, okay, can I make my house a little more affordable? I'll get to you guys in a second. But if you're looking to buy, maybe spring season's here, summer season's around the corner. As soon as the kids get out of school, people start to buy. And so what you see is, okay, now what do I do, Dan? I'm looking to buy in June, July, or I'm looking to build. It'll be done at the end of the year. Here's what I think is going to happen. And here's my reality behind it. The Iranian conflict will eventually be over. Oil prices will start to subside. Okay, if you start looking at a lot of the core inflation numbers, you're going to start seeing inflation coming down. But when you add in the oil and energy and food, it's really ratcheting up inflation. So I don't really think you're going to have an issue if you're looking to, close in the next few months. You're going to have rates in a tight range, about 6.25 to 6.5. But let me show you the economic news that's coming after the Federal Reserve meeting, and this might be the actually scary part. So the Federal Reserve, what they monitor is basically right through here. They monitor the PCE. This is inflation. This is the way they monitor it. It's called the personal consumption expenditure. Okay, they want this at 2. Well, it's 2.8. Unemployment rate is below 5. So they're saying, okay, this is okay. But tomorrow, after the Fed meeting, we're going to get a new PCE print. And they probably know this. So if you go over what's expected, let's go over to the economic calendar. If you go tomorrow, we're going to get right through here, the PCE. Well, what you're seeing in the front of this is core. That means it's stripped out food and energy. Okay, there's a reading here I want you guys to see. If you strip out food and energy month over month, well, they're saying inflation went from 0.4, it's supposed to go down. Again, this takes out the oil. But if we throw in oil, well, let's go down to the PCE without the core part of it that strips it out. And you're going to see PCE year over year. Last reading's 2.8, like we just saw. They're expecting it to go to 3.5. And I expected that to go into 3.5 or higher. So if you're sitting at the Fed, you're thinking, okay, inflation, we want at 2. It's at 3.5. The jobs market's okay. Earnings seasons are coming in good. There's no way we're going to cut. So that's what we need to focus in on. So my goals here is to say, well, once the Iranian war gets over, we're having inflation, when you focus in on the core, actually going down. So once an Iranian situation's over, you're going to be in great situation. But if you're sitting on the sideline like a lot of people right now, if you're a homeowner, does it make sense to refinance now? I don't know. What's your rate? But I got a tool for you. If you go to my website right through here, I created a tool. Right up through there. It's called Rate Watch 2.2. All I need you to do is plug in your mortgage information. Then give me 2 pieces of information you want me to track. What rate would you like to refinance? Yeah, I'll track that. And then how much of a payment savings would you like? 200, 300, 500? We can track it. We don't sell the data. It'll be me or one of my teammates calling you to just go over and say, hey, you want to look at the numbers, see if it makes sense. If it does, we'll lock you in. We don't know where rates are going to go from here. So if you're at a high rate, it makes sense, and your break-even points maybe below 2 years, like Dave Ramsey says, might be something that you look into. But that's it for today. So let's go back to the chart. We are minus 14. It is not filling right now. So let's go to the 5-day chart. Like I said, we got these gaps. Doesn't look like it's filling right now. But I'm saying this is going to steady out through the Fed meeting, and then once the Federal Reserve comes out, I'll be live to show you exactly where these are going today and the whys behind it. So that's it for today, folks. If you're a homeowner, home buyer, realtor, loan officer, hopefully I answered your question on what's going to happen with those today, tomorrow, this week, and maybe down the road. So thanks for watching. God bless. Have a fantastic afternoon. Join me here at 1:45 Central Time. I'm going to show you what the Federal Reserve did, the reactions to all this, and we'll break it down on my new charts. So thanks for watching, folks. Have a good one, and I'll see you soon. Bye.